Hi, hello, and good morning again. This is Paul. I hope you already had some good experience with my first two videos where I showed a setup strategy I'm using trading with the DGR indicators. Like explained in this first two videos, there are dozens of possibilities to trade with the DGR, as well as dozens of different uh, um, indicators inside of it. But I showed you the different aspects I'm taking out to use my strategy. So if you want to see the strategy in action, maybe you look first one of my two first videos. And in this video, I want to show you the settings behind this setups, and that you can really go into it, tune the settings, and try if you can be profitable as well. So I already made one a notification to show you the most important part, which is actually the DGR itself. The DGR is this wave line switching between the colors green and red. As you can imagine, green is the time when DGR is going up, when we are in a bullish momentum, and red is the time when the DGR is going down and we are in a bearish momentum. And all the time when we are above the DGR, like from here, it's crossing the DGR to the top. You see that most of this time, also like here, the DGR is going in an upward direction. So from here to breaking it over here, for example, it made a move of 23%, crossing it from here to, yeah, we could say there, 9. It stays kind of above until maybe, let's really say here, it's even 40%. And when we are beneath the DGR, you see it's crossing it here. It tries again to break it. It can't. Normally, we are more in a sideward direction, or we are even in a down direction. So from here to there, price is losing 8%. From here to there, price is even losing 16%. So this DGR really gives you a very, very good indication if the momentum of the price is going upwards, when it's up on the upside of the DGR, or if it's going sidewards or even more down when it's beneath the DGR. The DGR you can tune in the main settings. So here you see the CT DGR 2.0. In this indicator you will find the most important settings for the DGR. And then we have the DGR-Assist, where you find secondary indicators, which are also important, but yeah, like I said, the major part is happening in this one, and the more secondary parts are happening in the assist. The founders of the DGR, I think they just separated them from each other because it's just too much. So if you see inside of this one, you will see there are like plenty of things you can change. So with all the information also existing in the assist, which is this one, there are again like like this more indicators. It's just too much to put them all into one indicator. So they decided to more or less split it up and look for the most important one, put it in the first one, and the more secondary one, put it in the assist. So to go for the DGR, for sure we go in the main setting, in the 2.0. And if you open the 2.0, you will find the DGR Advanced Settings. I will just explain you really the most important things now. You can go much more deeper into it, but the most important thing to make my strategy possible is that you switch your time frame to 1 hour. So this is in German, so Stunde means hour. You can see here there are all the different time frames starting from 1 minute up to 1 month. And you can decide on which of this time frame the DGR is calculated. For example, you can also say use current charge resolution, and then anytime when you change the time frame, the DGR will automatically switch his calculation to the chosen time frame. I started with that for the first month or two, but then I found out with the help of some of the DGR founders and inside of the group that for my strategy, the 1 hour time frame is just the best. So I decided no matter in which time frame I am, if I'm looking into the 50 minutes, the 30 minutes, the 1 hour, the 4 hour, all the time I want to have the calculation of the DGR in a 1 hour time frame. So this is the first thing you have to do, switch it to 1 hour. The second indicators I'm looking for are this orange bands going here and there, and this orange line is indicating the buyer zone. So when the price is coming down to here in the 1 hour time frame where I'm in at this moment, the buyers are sitting on this line. So we can go a little bit more down. Let's see for the 50 minutes time frame. You will see the time frame is going much higher because for sure it's a smaller time frame, so we will narrow the range a little bit. And the line of the DGR actually stays exactly the same. It looks a little bit different now because we are just in a smaller time frame, but the crossing points and everything of this DGR is staying the same because it's still calculated on the 1 hour chart, on the 1 hour time frame. But here now you see this is in the 50 minutes time frame. We have now the orange line of the buyers, and you can see what happens when the buyer line is hit and is not accepted, like in this cases where the price is accepted. It tries it once, it tries it twice, but in both cases the buyers are strong, the price will go up again. And what happens when this doesn't work? It's crashing the line, it's even tried harder to go down, and then it breaks it down. So normally when the price hits the buyer's line, we expect a confirmation and a price change. You see the same here. Price is going up, up, rejected, up again, rejected, and in the third time it's able to break it. So in the same way we expect the price to hold when we come down to this line. So here you see the buyer line, and here you see the seller line. Let's just give them also a name. Oh, excuse me, 1 second. These are my buyers, and these are my sellers. So, and this line is calculated automatically by the chosen time frame. There's no need to make any settings in the assist or in the DGR. Every time when you change a time frame, the buyer line and the seller line and the buyer line will be calculated by the chosen time frame. So there are no settings needed to tweak it in the one or the other direction. The same, like just explained, is for the 50-50 line. Ah, come on. What's wrong with me? Thanks. Here, the 50-50. This blue one is more or less the zone where buyers and sellers are, where it's uncertain the price will be more bought or sold. So like you can see here, the price is coming down to the 50-50 line. It's not as strong as the orange lines on the upper or the downside. It's more like very often the price is like bouncing around it, dancing around it. But here you see it's kind of accepting it, but no, it's going up again. Then it's accepting it more. And normally when it's breaking it, it's really going down. Here it's coming up again, it's accepting the 50-50 line, and it's coming down. So the 50-50 line is an indication which is also very necessary, because there you see prices could change, but it can also happen that the price is just running through it. But here you see also it's coming up to the 50-50 line, accepting it in a way, coming down to the bias line again, breaking it, and then you see from the resistance of the 50-50 is now a support, and it's very perfectly accepting the support here, confirmation of the support there, and going up. So the 50-50 line is giving you a good chance to have a glimpse into what could be the next price movement, going up or going down. But for sure, the 50-50 line every time is something like a point where price can decide either or, so in any direction. Like for the orange line, the 50-50 line will be calculated new in the moment when you press a new time frame. It will automatically calculate in a new way. Then I was using in my last two videos the green one, which is this one. This is the bull trend, and then the opposite is this red one. This is the bear trend, and these two lines are showing you in which trend we are actually in. The same for the orange and the blue one. These two lines are automatically calculated by the chosen time frame. So also no need to change anything by yourself. The DGR is doing this automatically. And what you see is when we are in a down momentum, the price is indicated with this red line. And just when the price action is breaking at this line and closing above it, so you see with this candle here, it was opening here and closing directly on this line. It wasn't enough to break it. Yeah, you see, it was just like inside of it. But with the next candle, this bearish momentum was broken. With this candle, it was broken, and the red line disappears, and the green line comes into place. It's just possible that the red line or the green line is plotted. It's never both in the same time. So it's very easy, it helps you very easy to indicate if we are in a bullish trend or if we are in a bearish trend. And like before, these two are connected with the chosen time frame. So if you see now we are in the 50 minutes time frame, we just started to be in a bull trend. If we just go up one time frame, let's see what happens. There you see the bearish momentum is still active. The price tried to come up. It couldn't overcome this bearish momentum, not once, not twice, and now even it's going away and has more distance to this price. So in the 13 minutes time frame, this bearish momentum is still very valid. And when we go up even one more time frame, you will see that the red line is going even farther away. It's up here now. So you can see that to break the bearish momentum in the 1 hour time frame will even need more power from both sides. I will go back to the 50 minutes time frame just to come back to our first view. And also because the 15-minute time frame in my strategy is normally the time frame I am using to go for my strategy. So yeah, enough said about these two indicators. They really help you to understand if I am in a bullish or in a bearish momentum, in a bullish or in a bearish trend. And very often you will see that the price is really also accepting these lines. It's not just a visualization of the trend, it's also a line plotted at the point where the price needs this extra power to break it, actually. Here you can see also a very nice, for example, just for the last example, the price came down, we were in a bullish uptrend. The price came down, and with this candle, with this 50-minute candle, it broke the bullish momentum, but it closed above it. So the bullish momentum stayed active. If the price would close beneath it, so somewhere here, the break of the bullish momentum would already happen inside of this candle. But like you can see, it started there, it started 2 candles later, when the close price of this 50 minutes candle really was beneath this green bullish trend line. One more important thing to show you are the step line, we call it. And the bit boxes. And these two indicators are both visible in the assist. So the DGR has to be changed in the 2.0 in the main part. All the rest I showed you up to now is automatically calculated by the chosen time frame. And now these fit boxes and the step line are both in the assist. What are we doing with that? The step line is more or less a very crucial point of price changing, of price momentum changing. Like here you can see, for example, the price was above this gray step line. It crosses this point, which was very fast actually. Very often it doesn't cross the price just by hitting it once. It takes sometimes 2, 3, even 4 attempts to break it. But if the price is going through this gray step line just in the first move, it's already showing you that the momentum in which we are in, like in this case the bearish momentum, is strong. And just very, very short after that, we see it was really strong enough to bring a very, very big shifting in the price. So after crossing it with this first move, we couldn't be sure about it, but the chances were much higher that this 15 minutes buyer line will not be accepted. If the price would maybe more like that, you know, like jump around a little bit, like here, let's say the price would be more like chank, and then break it. We would have maybe one confirmation, we would have a second confirmation, and then we could say this point really could be a good chance now to at least try it another time to cross it. But it broke it with the first try, which really showed a very, very strong move to the downside. What we can see now, price is coming up, price is even breaking our bearish trend, but what is holding is our gray step line. Together with the decreasing sellers line, this point is now very crucial, and like you can see, the price tried it 1, 2, 3, 4, 5 times to overcome this step line, to overcome this decreasing seller line, but it's this both in combination is such a strong resistance point that the price now is going down again to maybe try it in the next move. Let's just go back a little bit in history to see for maybe one or two more examples about the step line. Here we have a flying high above it. Let's just quickly see for me. I will go in a bigger time frame to make it maybe a little bit quicker for one or two more examples. Let's give my system the time to recalculate. Where are we even? Oh yeah, okay, it jumps down. So maybe here you can see we are beneath the step line. These are 4 hours candles, and you see very nice that the price every time is like on the top of the price is on the step line. 1 time, 2 time, it goes down, tries to get new momentum. 3rd time, 4th time, 5th time. Every time the price can't come higher than the step line. So you see this step line is really a very, very crucial point for it to overcome it. And when it overcomes it, like here, it overcomes it, and normally it comes down to it and tests it for a confirmation. So it tries to overcome it, can't, overcomes it, but then it comes back to it, and you see it's even breaking it. But the closing price is staying above the step line. So the closing price is just slightly above it. And when this happens first time, the second time, now we could say, okay, this gray step line, which was a very hard resistance for about a day, is now support. And this is exactly what happens. It's now support, and the price momentum really breaks it hardly. So this is one nice example to show you the power of this step line. Maybe here you could see another one. The price came up, came down, and now you see the step line over here is a support. It can't break it a lot of times. It has to come up again. And now, because the step line is going up, the price is coming down, it's much easier to break it. When the step line by itself is in an up momentum, it has not such a strong position as when it's in a horizontal line. Then it really helps more to be a support or a resistance. When it's moving up or when it's moving down, in this moment, it's crucial for the step line. It's more or less changing the point of indication. So this is an easier moment for prices to cross it. But here you can see again when the step line is in a horizontal when the step line is in a horizontal, price has much more problems to overcome it. Now it overcame it, but it comes again to it, takes it as a support, chuck, tries to come up. Here again, it's accepting it, and now finally it's breaking it. Coming back to where we were before. I have to search for where we were. Here. I go back to my 15 minutes. Okay, so we are going again now for the settings, and I show you the first time how the assist looks, or I already showed you, but I show you now where you can change the step line as well as the fit boxes, where I will say something afterwards. So in here you have something similar than before. You can change on which time frame the step line and the fit boxes are calculated. And this is this one over here. The topping is called Advanced Fibonacci, and you have this larger rest than chart. When you change something in here, you could choose the same as the chart. We had this before, so when you choose that one, automatically all the assist informations will change to the time frame which is actually chosen. But I recommend to go for daily informations because calculated by Fibonacci numbers, we want to have a bigger view, a bigger picture over here. We want to have, like, even if we're in the 15 minutes time frame, we want to see where are the bigger supports lying, the daily supports lying. We could go for hourly or 4-hourly informations, which are pretty nice and also very useful in other strategies maybe. But in my strategies, I'm using the informations out of the assist for the bigger picture, like I call it. So I use the daily Fibonacci informations. And if you set it like this, all the informations from the assist will be calculated on the daily time frame, no matter in which time frame you are in. You see when I'm searching, going here for 4 hours, again, you will see automatically this gray line will completely change its movement. So I'm going back for the daily, and you say it's coming back how it was before. The second and last thing which I'm using for my strategy are the fit boxes. This one's over here. And the fit boxes are the same. They will change their position with this indication here. So if I change it for hour, just have a look. They will recalculate and change their position. So I bring them also back to 1 hour, and they will jump back into place. And the second thing which is important, but which is much more for your overview, is you can change how many fit boxes you want to see. If you want to see the complete fit boxes, you have to switch this indicator on. If you switch it off, you will see that just these 2 fit boxes are staying in the chart. Let me do it like that, then it will be much more clear. Now you will just see the first fit box beneath the price and the first fit box beyond the price. But when you say you want to see them all, you will see even all the second and the third fit boxes beneath and beyond it. So this is just about how volatile the market is. So when the price is not so volatile in this moment, it's completely enough to go for this one. So the chart looks a little bit cleaner, you don't have too many informations in it. And when the price is not very volatile, I don't need this information, where is the fit box after that and even the one after that or down of it. So normally I'm just using it like that. But when I see my price is already somewhere here, so already is hitting the first fit boxes, it can be very helpful to see, okay, where is the next, and the next level be beneath it, and even the one be after. So this is more about how, if you want to have it visualized already, because the volatility is very high, or if it's enough to just work with the next 2 fit boxes. So let's clean it a little bit. I switched it off, and you will see just the fit box, the next to the top and the next to the downside. And these fit boxes are like resistance and support zones, calculated by the Fibonacci numbers on a daily time frame. And you see here, this fit box, in this case, it was really a very, very strong move, was just like crashing it. It's like they were not even existing. So this is not a very good example for the power of these fit boxes. But let me look a little bit back. Here, for example, you will see very, very nice how the price was walking into the fit box and just accepting it. Very, very nice. Also here, the price came down, the fit boxes, with the former fit box moved shortly up, short before here, you see it moved up, but somehow it has still some indication value, because just like 30 minutes, 40 minutes before, it was still there for the last hours. Combined with the DGR, with the step line, this gray step line, when the price came down here, it had at least some momentum, some indication, still some power. Let's go a little bit more back, see some more examples. Here, for example, you see very often that this fib boxes also come into place with other indicators. So in this momentum, for example, our orange seller line is just in the beginning of a fib box. So this is very nice for you, because you have two indicators at this point: the fib box as a resistance area and the seller's line, which was broken here but couldn't go higher than the fib box. So the fib box alone isn't enough very often, but the fib boxes in combination with the rest of the indicators can give you a lot of information. Also here you see the price coming up, very strong move, so the sellers can't hold the price down. The price is going up and up in the steps, and like you see here, it's perfectly hitting our fib box. Here it's trying to come inside of the fib box, but it can't. Here you see price coming down, staying inside the fib box coming up actually, price coming up with it too. Let me see if I see just one more example. But I think here most of the time the prices are just, yeah, the price is just too far away. But you see, all these indicators actually I'm talking about are as a standalone not what we are looking for. So just when the price is coming down here, it doesn't mean automatically that the price will accept this line. But with the combination of the DGR, the seller and the buyer's line, our 50-50 line, our gray step line, and our fib boxes, so with a combination of all these indicators, you will have a bunch of help and very, very powerful tools to maximize the exactness of your predictions. So I hope with this video I could help you to make the right settings for my strategy, and to help you again to understand the different names and how I use them and how I see them in this strategy. And with the next video, I will go again inside of some active using of this DGR. In the next video, I will start and show you in our Discord group how I'm actually searching for potential new coins which I will trade, how I'm searching that with the help of our Discord group, but also what are my first steps I'm taking using my DGR informations, and actually what I'm waiting for before I'm going inside of a trade. So I hope this was helpful, and I see you the next time again. Bye bye.